Back to what we're doing here in the markets as we count you down to the closing bell. Every time I see this calendar with this wild ride of the markets, it really is remarkable what we've seen here at the end of August. The triple-digit swings almost every day. Market volatility assigned to some that the September rate hike is off the table. Others say, no, it's still on. But over the weekend in Jackson Hole, you had the vice chairman of the Fed, Stanley Fischer, hinting that the Federal Reserve was still considering hiking rates at their next meeting. And as I say, some others say the opposite. So what does it mean for the markets and the money that you're watching out for yourself? Jeffrey Cleveland, Payden and Rygel chief economist, is with us. And so is Jim Frischling at NewOak. And he's here in the studio. And Jeffrey, by the way, I'm the worst guest host for these types of shows. We have two major themes on the show today. I think it's the Federal Reserve, and then we're going to do a big story on the football later. And I said, I'm sick of the Federal Reserve, and I can't stand Deflategate anymore. So I will never be invited back. So I'm just going to have the best show that I possibly can, and then forget about it from here. Jeffrey, maybe you feel differently. Are you sick of the Federal Reserve and wondering whether or not we're going to go a quarter point higher in rates and when it's going to happen? I just want it to happen tomorrow so we can stop talking about it. Your thoughts?
I actually agree with you on both points. Sick of the hand-wringing. Yeah, Deflategate especially. We can talk about that in a bit. But the Fed is, composed of policymakers. And as Charles Plosser said best over the weekend, what do policymakers do? They do a lot of hand-wringing. And so they spent the weekend doing that.
Yes.
It seems to me like that a rate hike is still on the table, quote unquote. Whether they go in September or not is a whole other story. From our perspective, though, the bigger issue is that the economy is fine. We think the revisions that we saw and the data last week tell you have a good, solid.
What does fine mean? Because there's all kinds of theory. What do you mean by what is define fine as for an economy in your view right now?
30-year average for GDP growth is 2.6% quarter to quarter annualized.
Right.
Or year over year, this year versus last. And as of Q2, as of the second quarter, what was the economy growing versus a year ago? 2.7.
There you go. So are we fine,
So that
Jim?
would be fine.
I'm good with Jeffrey's comment on fine. And by the way, I'll talk about Deflategate as a native New Yorker and a New York Giants fan. I'll talk about the Patriots and Deflategate and all day long. But I think we're talking.
I'm a Jet fan, so it's even worse.
This segment's about markets.
So far, yeah.
I agree with Jeffrey's comment on fine. And actually, look, I think I do wish the Fed would. They've signaled enough. Yes. I wish they'd stay the course. Job growth is happening, not as fast as people would like.
You want them to raise rates?
It's going to be a quarter point.
They got to do it at some point anyway.
And I think the combination of Fed signaling now, September, December, postponed to 16, oil certainly at lows, and obviously the China deceleration or the slowdown of their economy. Those are the three things that sparked all that volatility.
Oh, well, how are you preparing yourself, investment-wise? How have you set yourself up for the fall? Because September could be a brutal month for stocks. It often is. So.
But first of all, I think China is overblown as best as we can understand it. But domestically,
why? Well, hold on, real quick. Why?
I just think the actual amount of their contribution to our economy, I think, is far more de minimis than people.
It doesn't matter as much.
I think it doesn't matter, but I'm saying it matters
not as much as people think. You agree with that, Jeffrey? I'm going to get Jim's thoughts on the markets to wrap it up. But do you agree with that on China, or you think differently?
Oh, I think it's overhyped, it's overdone, it's overblown. It's a topic du jour, but I don't think it's going to have a big impact. The U.S. economy could continue to grow at 2.5%, 3%, even if China slows.
We're such cynics, the three of us. Listen to all that. Nothing matters. Real quick, what were you saying on the markets, and we'll wrap up?
The housing market is strong enough that there's a lot of domestic plays to look at, and there's still millennials who are not getting in the market, in the housing market. Okay, they're going to start moving in. Rents are high. I think housing is going to keep us moving, and again, I believe the U.S. economy, jobs, wage growth, consumer confidence. These are good stories for the U.S. stock market.
The glass is half full. The football, man. Jim and Jeffrey, thanks to both of you, and we'll move on to Deflategate a little bit later on. Good stuff. Thanks for joining us.
My pleasure.